Good evening, traders. Welcome to the Sunday Open. I'm your host, Craig Shapiro, macro strategist here at NinjaTrader Live. It is March 29th, and we are entering now the fifth week of war. Going to almost be the second month of war. It's the last week of the month, the last week of the quarter. A ton to get to for the panel this evening. Live with you again for the open here. Have Sara, Pax, and Pharm, the regular crew, checking in, just waiting for futures to tick live and be open here. So, but you know, weekend news was kind of slow. But let's take a look at what's going on here. Like every other Sunday for the last several weeks, we've seen the open here be crude up, gold down, stocks down, volatility up, dollar bid. So it's kind of a similar type backdrop here for for us to start the Sunday open again. I'm just looking here now. Crude's up to 102.41, up 2.5%. Russell down 94 basis points. Minis down 50 bips to 63.78. Nasdaq down to 23.180. Bonds are a little bit mixed to softer. Again, the dollar a little bit stronger. Keeping an eye on dollar yen for sure through the important 160 level. That happened on Friday. It's continuing today, 160.31 last. So a similar start to the week. What we've seen over the course of the last several weeks during war is we've seen the markets put in bottoms on the Sunday open and rally through Sunday night into Monday and into Tuesday and then fade towards the back half of the week. Happened again last week. So we'll see if that's the pattern du jour again. But let me just bring in the panel and introduce again Sara checking in from Southwest Florida, Pax from Chicago, and Pharm from Arizona. How is everybody doing here on the Sunday Open?
Great.
Very good. Ready to go.
Always great to see you guys, and I can't wait to hear what Pharm has to say.
Appreciate that.
I'm good.
Thanks.
Not sure if you guys can hear me.
Yes.
What?
Yes, we got
can
you.
hear you.
Okay.
What?
Woo,
Nice. Well, I mean, I was thinking about this before we got on. I'm getting fatigued by the war and reporting on it and talking about it. I feel like, unfortunately, as market commentators and traders, we have to kind of deal with the stories and the news that's top of mind. And this is a grind every week to kind of think about the dynamics here between what the government, what the Trump administration is saying or doing, what is Iran going to be saying or doing. I've been spending a lot of time trying to think about the game theory here and whether or not they're going to open up the Strait of Hormuz and how and when and why. And it's the only thing that I think the markets are keying on and focusing on. If the supply chains stay closed, every day they stay closed for longer, it becomes a bigger problem for the global economy. And I think markets last week started to really come to grips with that reality. We had the Trump first taco on Monday morning around 6:45 a.m. That's this big spike up here on the chart as he talked about, a 5-day ceasefire, which was supposed to get us through on Saturday. And then, later in the week, similarly here at the close, I think it was after hours on Thursday, a little bit of again, we're going to do a 10-day ceasefire. We're not going to attack energy infrastructure assets or power assets for 10 days through April 6th. Market kind of called bullshit on that one, though. And I think that was the sign that not necessarily that we don't believe, but the degree of difficulty about getting a deal here is becoming increasingly more likely to people. They realize the issues here and Iran's not giving up so easily its control over this. There was some legislation out in Iran over the weekend about formally turning Hormuz into basically a toll road for them to extract more economics, more revenues, decide who gets to go through and when, at what speed. Their ability to throttle the global economy will have a very negative impact on things. So that's the dynamic we have to start the week here. Let's turn it over to Sara. Let's talk about the indices. How are you thinking about the setup here? It's the last week of the month, last week of the quarter. There's a big JP Morgan put collar ratio trade that comes off the board on the 31st. The strike price there is cash level for S&P 64.75. We're obviously lower than that now, but keep an eye on the dynamics there into Tuesday when they have to roll that position. So some buyback of those hedges is likely. But Sara, how are you thinking about things here?
You guys, okay, we got my screen up. Good. So what we've kind of been talking about, I've been using the macro timeframes, the higher timeframes to kind of get, a baseline for what the market's doing. And we've been talking about how we have the potential to go outside year. This is the yearly candlesticks. And so still, we're still bearish. We're still coming through last year's range. So we could get, this could get a lot, it could get a lot worse, right? So if this is your broadening formation, you've got a low, high, new high. We're coming back in. So if this is the broadening formation that we're working with, we're destined to take out this low down here at 51.66. Now, like you said, we do have, the end of the quarter, end of the month this week. So starting, the new quarter, it's going to be important for us. So what we're going to want to pay attention to with the new quarter, because this quarter was an outside quarter. So next quarter, we're going to want to know if we stay below this quarter's low or start coming back up and through it, because that's going to matter a lot. So, quarterly flips are important. Any kind of flip is important, or any kind of new candle is important, because it can change kind of like the direction for that time frame. Or so like from a month to month basis, it can change. Like you can clearly see, pretty much for the most part, like selling, new candle, buying. So we're going to have to see what happens. I don't plan on doing too much trading this week, with it being, the end of the month, end of the quarter, short holiday week. Markets closed on Friday. And I'm pretty sure Trump is scheduled to speak here in 24 minutes while we are on the stream. So I kind of, am taking it easy. I'm not since the war's been going on, I've kind of not been doing my normal, like, weekly setups, because we're opening all over the place lately and I don't know where we're opening. So I'm pretty much just focusing more day to day and then intraday, because some of the moves we've been getting intraday have been really nice. And it just seems to be easier to day trade right now when things are moving.
Yeah. I know I ask you this consistently, but across the different indices, are we now kind of firmly in correlation of one camp, everything kind of moving together here? Or are you seeing anything that's particularly interesting, one versus the other?
Everything's really kind of moving together. The only thing we can still say is RTY is stronger, as it has not taken out last quarter's lows.
Right.
But they're all, doing the same thing, which is what's kind of, I guess, what's the word? Speeding up the selling pressure, or the selling, because they're all doing it. It's not some sort of rotation. Most things are just all going down.
Yeah. Pax, I'm curious, any reason to believe, given the open they're seeing right now, just that, this pattern of put a low in sometime on Sunday night, rally through the early part of the week, fade the back half of the week. We've seen it now 4 weeks in a row. Any reason to believe, based on what you're seeing so far, it's only a few minutes in, that this could be different, or anything you're thinking about that would lead you to believe that the selling may accelerate early in the week and be different than what we've seen over the course of the last few weeks?
Yes. Do you want me to explain? Or,
I'd love to hear.
Or is yes
We
a
would
good
love
enough
that.
answer?
Yes is a firm answer.
So I do. So we've had, like the last couple of weeks have been bullish reopens on the weekend, on Sunday nights, right? Like the low was made off the open, and then we rally for a day or two, and then we sell off, and then it's just a lot of the levels and the swings that I'll talk about in a second. This is sort of a bearish open on the week. Now, does that change the dynamics of the way that things are working? I think that people kind of look at, patterns, I suppose, will be like, oh, okay, so this is reversal. So we're gonna, from the last 4 or 5 weeks, so it's a bearish open. So we're gonna break Monday, Tuesday, and then rally in the latter half of the week. And that with the end of the month, end of the quarter trade, as you were talking about the JPM collar at 4475 at 4475. I'm sorry, 64.75. That very well could happen. It's 100 points away. But there's also a lot of times, Anthony Crudele and I have seen this a lot in the last few years. The end of the quarter trade has changed a lot, and so a lot of the things that we would do going into the end of the day of that trade, have shifted. They've changed. So depending on how we trade tomorrow and Tuesday, and whether or not a President Trump tweet can, give us a pump in the market only to be sold off, we could. Now this is again. It sounds like I'm equivocating. We can either rally or break. I hate when people do that, but we really can sell off. And I may be talking my book because I'm short, but we're below some pretty heavy levels. The quarterly pivot is 65.94 in the S&P. It's 24,291 in the Nasdaq. That's the new quarterly pivot. That's a quarterly pivot for the whole month of the June, or the whole life of the June contracts. We are way below those, and with no real sign of coming anywhere near back to them. This is the first time since the tariff, where the tariff tantrum, where we had any sort of well, we don't know if it's sustained, but any sort of real selling underneath it. So and that was a bearish close to the futures quarter that we had a week and a half ago. So I'm bearish. I have not made. I have not kept that a secret on the show. That doesn't mean we don't get big tradable bounces. It doesn't mean that we don't put a nice low and then turn around and retest some of these levels. I hope we do. But there's keep in mind. All right, now also the S&P, the Nasdaq is trading in 472 point swings from the quarterly pivot. Okay, 472 points. So the next swing down takes us to 22,820. The S&P is trading in 154 point swings. The next swing completes at 62.86. So I'd like to see us trade down to 62.86. If we're going to find a bounce, that could be a spot to do it. 154 points in the S&P, 472 points in the Nasdaq, and until we close above those quarterly pivots, that is just mark that on your chart, because that is where we're going to trade to. Okay, and we close above. If we ever close above 65.94, then we'll have new and bigger swings. So I'll have a lot more to say as we kind of continue on. The idea of this, and I've been saying this since the start of the war too, you guys, is to make sure you survive to thrive. Okay, you don't need to be a hero. Have your risk defined, and if you can absolutely define if you can define your risk, and then you can take the trade. But if you don't have that defined risk, don't. Just stay out. When in doubt, stay out. If you have it, jump in. Have a hunch, trade a bunch.
I never heard that one before. I like that one too. I didn't realize Trump was speaking. I mean, the guy has been speaking, so much over the course of he was golfing a lot this weekend. But the question I think the markets will have is, what could he say that markets will believe is something sustainable? Right. And this is something that is going to move Iran to actually open the strait sooner. I've been doing a lot of work. You can check out my Twitter feed about some of the things. Just, the economics and the game theory suggests that Iran's going to keep this open or keep their control over the strait for longer. Yeah. They're going to keep it closed longer. They're going to keep it controlled. And the longer that goes on, the worse it is for the global economy. And the dynamics are, what I think you're seeing the countries and the regions that are most exposed are getting hurt the most, right? I mean, like look at dollar yen through 160. Japan is a huge energy importer. Korea, Europe, those are the areas that are going to feel it first. And I think they're certainly feeling it more than what we're feeling it here in the U.S. So it's getting harder for Trump to control all the markets, but he's obviously trying to. The other thing we're seeing is the bond market weakness. Interest rates moving higher. Not only removing interest rate cuts from the front end, but the long end has just been real weak. 30-year yields are going to move above 5%, can move above 5%, this week. I mean, clearly a headwind for equities and equity multiples. So certainly a challenging backdrop here to start the week. Let's shift over to Pharm. Pharm, how are you thinking about the setup here? I know you had a couple big trades from last week, but what are you thinking here?
Yeah, I mean, first allow me to lighten the mood a bit with a truly heartwarming story, I think. So Craig will tell you that he goes to sleep with IWM puts under his pillow. But let me tell you a story about true bear heroism. Okay, so Craig and I were down in Florida not long ago. It was actually for a Ninja event, and we went to a country club. Beautiful place, palm trees, sunshine, lots of bulls. Okay, I'm talking aggressive, dip buying, no stop loss bulls. Right, Craig. He had something on him, okay? Something incredibly valuable. He had IWM puts. Now, these puts had been passed to him originally from his great-grandfather who bought them in 1933. Now, he knew if these bulls got a whiff, they'd take those puts. They'd sell them for sure, possibly even use them to fund upside calls. He was having none of that. So he made a decision in that moment that can only be described as true courage. He hid those puts. He hid them in the only place the bulls would never look. He hid them in his ass, of course, for 5 long hours through dinner, a speech from Delhi, even PAX. He was there. He never lifted a cheek once. Even through the suspicious locker room trip on the way to play cricket, didn't flinch. And before we left, he said to me, if anything happens, you make sure these puts get to my son. Now, fortunately, we made it through. I didn't have to grab a latex glove, and he still holds his granddaddy's puts. Soon enough, IWM will find its fair value at 0, and those puts will pay. I just thought that was a truly heartwarming story of heroism. It was a little bit harrowing at times, but we made it through. Craig's here with us, and he's got those puts. So let's talk price outside of the natural price target of 0. I've got ES up here first.
He keistered the puts.
Where else are you going to hide them, man? I mean,
they're very tricky,
these bulls. No, absolutely. So, look, I mean, we've talked about this 6-month nearly balance that at least in my opinion, that's sort of what it has been. We could make an argument that there was a 2-month balance up higher between 6,800, 7,000, whatever. The break of that certainly in that yearly level certainly accelerated things to the downside. But we got day one of that range break, right? November's low was on Friday. And you see, and it was actually November's low on SPX was offered overnight on Thursday night on ES. That was this lower high right here around 64. There was some supply there on ES as well. And you can see what happened once that was offered, right? So we puked out of balance. For the second gap down and go in a row, Thursday, Friday, gap downs and go. So, I mean, that's day one of a very, very, very large balance. So rushing out to buy the dip, usually not going to work out too well. It clearly did not on Friday. I've said for some time that my target is basically the February 2025 highs, right? Around 6.1, 6.9 roughly. I mean, I'm rounding a little bit, but not really. And I think that's a natural target here. Some of the selling is starting to pick up in its level of aggression. So is it possible we get a relief rally soon? I think so. I do think unequivocally that puking lower first this week instead of doing the same shit where it just floats up on Sunday night into Monday, into Tuesday, and then gets stepped on. I think it's a lot better for this thing to trade lower first, and not just talking about here, right? I mean, we haven't even traded 30 minutes yet. But a couple of the big levels I'm watching to the upside, because downside speaks for itself. There's nothing to say. There's levels in between, sure. But as long as we're framing lower on the daily, we're making new, lower lows each day and lower highs. There's nothing to talk about. In order for there to be a reversal, there's going to have to be a multi-day balance formed that then breaks to the upside. So we're not there. So there's no point in talking about anything else. Some of us will be watching the tape very, very closely for signs of a good low. And we'll talk about that, on the morning shows, on the days that I'm on, if we've seen that, if we haven't seen that. But for now, as long as this continues below, Friday's low, it's a short, objectively. Like Pac said, I mean, is there going to be pops? Is there going to be longs? Absolutely. But this is a long way to go for me to become a long. So I'm watching, there was some single prints on Friday between 64.41, 64.49. Basically, I'm just calling it 41. Basically, if you peak up there, fail, you're coming right back down. We did have a spike down again on Friday. It just means new low day was made in the last 30 minutes. So things are starting to get, a little bit forced on the selling side, but like still nothing really crazy. No real panic, no capitulation volume, nothing like that, because there are a lot of puts that are held by people, that slapped them on a little late, perhaps, but they do have them. And we have the end of quarter. We talked about that trade, all that kind of good stuff. For me, the other big level, or really the big level, I would say, is going to be this 65.73 to 65.80 on ES. Like any kind of consolidation to me below there is bearish, outright. And if you look at the SPX again, so this lower high was roughly the XPX November low. I want to see, both SPX and ES firmly back above November's low. So for ES on an RTH basis, it was 65.39, 65.25 on an ETH basis. And for SPX, it would roughly correspond this week to about 65.60, but I would still say 65.73 to 65.80. So any consolidation below there is just bearish consolidation. So if we do rally off this, and there's fair reason to, there's some decent spots down here on both NQ and ES, same type of deal. We can come up and we can form some kind of 3-day balance. Let's say we come up, again, the better situation would be Monday makes a new low, maybe some kind of hammer candle, right? And then Tuesday comes up and it makes it to, Friday's high, right? We've got a bearish RTH gap sitting right above. So that just means that Friday's high to November's low was not traded during RTH, right? So there's a bearish gap there. So from there, if we did form some kind of a 3-day balance and we broke that to the upside with continuation, that would be a good look. And we'd probably come back up here and test the 65.73, 65.80. If we get some kind of 3-day balance that forms below this RTH gap, which sits just above this 64.92 to 96 spot, and we just kind of like get some kind of peak above and fail and then shit the bed, that is what it is. I'll certainly be looking for a short there. Both have a lot of work to do. I just think it is a lot better for them to Ralph this out, not do the silly Sunday night rally thing. The problem is I reported to Ken Griffin, so I apologize for this. I had to report it. We are going to the Cheesecake Factory tonight. Now, I'm not planning on eating anything other than a salad, but if you do see a rally, I might have buckled and had a piece of bread. But otherwise, the diet's going very well, as can very clearly be seen in price. We called that out a number of weeks ago. Craig said something about 5 weeks of war. I don't know. What are you talking about? This war stuff. 5 weeks of my diet have been going very well, and that's where we're at. So, we don't need to be a hero. You are going to get a multi-day balance that forms. And you can then trade against that balance if you have a long bias. I do kind of lean towards a low being found soon. I don't necessarily mean a bottom. I just mean, a low. And it becomes more tradable the more aggressive vomit there has been on the way in. Look for that balance to form before trying to step in, and then you can dip buy against the bottom of that balance, a failed downside break of that balance. Those are the types of trades that offer a high reward to lower risk and have a decent probability of at least getting you, let's say, 100 handles or whatever to get your stop protected anyway.
Right. Well, for those of you who are new to the show, what I like to do is go around the panel and get everybody's views on different asset classes. But obviously, first, if you're new, then Pharm is the storyteller of the group. And I think that the chat has named the place for where I stored those puts as the prison pocket. And so we are going to be going forward with that's where the puts have been stored. And so, yeah, that's where I kept them, and I still have them, and they will be passed down from generation to generation here. But it is a big week coming up this week. Actually, just looking ahead at the calendar, Chairman Powell speaks tomorrow as well. So in addition to possibly getting some Trump headlines here from the helicopter or wherever he is, Powell speaks tomorrow at about 10:30 in the morning. We haven't heard from him since the Fed meeting. So about 10 days later, since the Fed meeting, 10 more days of war, 10 more days of price action with respect to crude rates. So it'd be interesting to hear from him to see kind of how he's thinking about the transitory nature here or not of inflation. And, can the Fed or will the Fed do anything to address, what's going on? I think the expectations obviously are no. No rate hikes really are being priced into, for the next, 6+ months, some potential for December. There are some folks who think hikes could be coming Although with the Trump administration, I highly doubt that's going to happen. Mentioned the quarter end dynamics. Then on Wednesday, we get ISM manufacturing survey. We get the JOLTS print. And then on Friday is a weird day. It's Good Friday. Cash markets are closed. Futures will be open, I think, for holiday session, and non-farm payroll information will be delivered. So we'll get a reading about the labor market on Friday morning. Kind of how is the labor market short-term reacted to the dynamics in the Middle East? Probably won't see much there, but obviously last month was a disaster print. If we get negative revisions there and another negative print here, sure signs that the labor market is deteriorating. There'll be calls for the Fed to be doing more and sooner. So I did want to maybe just look over at what I'm looking at here, which is the sector breakdown underneath the hood of the S&P. So for last week, I got it brought up here on a week-to-date basis. Gold miners, the best performing ETF on the week, up 7%. And then not surprisingly, energy, right? That's been the big story. Crude up another 3%. We'll get to crude right after this, but XLE up 6% on the week, up 11% on the year. The XOP, which is the E&P ETF, up 22% for the month. Last week as well. Materials are up 4%. Utilities, defensive, posture, staples up 1%. And then underneath the hood here, the weakest stuff has been NASDAQ related. It's been growth stuff. It's been secular growth stuff. Software has obviously been on the receiving end of continuous beratement all year, now down 27% for the year, down another 7% last week. XLK, the big tech ETF, XLC, which is communications ETF, down 4% and 5% last week too. So you could see where the market has been rotating capital out of secular growth into hard assets, energy, materials, gold related, stuff, last week. And so, and then on the year to date, I could fly right up here, but XOP up 49%, XLE up 40%. I think this is the best performing quarter for the XLE ever. Which is truly incredible, and you can really see how the energy price momentum is taking the market by storm here. But again, crude up 3.15% to 102.78. Markets bounced a little bit off the lows. Minis down 50 basis points, 63.80. Nasdaq 23.206. Dollar's a little bit stronger. Bonds are mixed. Let's shift it over back to crude. That's been the story. Sara, how are we looking at the crude market here? I know last week you had some crude positions. I think that what's your positioning here and how are you thinking about it?
Okay, wait for you guys to see my chart. There we go. So it's kind of cool. Like what we talked about last week, exactly happened. So we talked about the orange lines last week was an inside week. And then we opened inside that week. And then I said, if we couldn't stay below last week's lows, we would likely become an outside bar, which is what it happened today. But we started coming back through the range. And this is why I'm always talking about levels and why they're so important. Because if we're to stay below them, you can stay bearish. But if we're to get above them, you've got to flip bias and be long. So still, the energy sector, like we have more like share or what am I trying to say? Stock positions than we're trading futures in our community, like OIH, Oxy, XLE. Like we've known about energies all year from the yearly charts. So we've been, looking long on oil since the beginning of the year. And so it's still going up. So we just triggered a hammer week with this open. I'm going to kill this line or this drawing now. So still up. So now we've taken out last week's highs. And these levels are from not the daily, because we don't have any levels on the daily. Where did I get them from? The 4 hour. Yeah. So 4 hour and 1 hour levels. The green numbers on the price access over there are the levels. So like 104.50, 105, 107.40, 116, 119, 123. So all those levels, and they're kind of clustered together. So I would expect these to hit pretty shortly or all at once.
No pun intended.
Yeah. So yeah, still looking good for oil.
Remember we talked a couple weeks ago about these blow off top patterns that we've seen over the course of the last, several months across different asset classes, and was kind of wondering, did we already have that in crude? Who knows, right? But it's been consolidating nicely, and I think now we're kind of, like, as you're pointing out here, just kind of breaking out of this little consolidation range. Obviously, it's very, continues to be extremely headline driven, but to start the week, constructive price action. Pax, how are you thinking about crude here?
I'm not thinking much about it. I missed the entire crude trading because I missed it. I've been trying. I'm trying to experience JOMO over FOMO. So I mean, we have to buy dips until there's a resolution to the war. You have to find places to get long. At this point in my career, I think I talk about this pretty consistently. At this point in my life, it's more important for me to preserve the capital I've made than it is for me to jump in the middle and try to catch something. I also don't. We were talking before, Craig, about before the show about the lack of realistic news that we're getting. What is really going on in this war is not being reported to us, nor will it ever be reported to us until after it's long happened or until after things leak. So, the things that are moving these markets are going to be really unknown to us. Not all the time. Sometimes we can gauge why we're moving, how we're moving. Anyway, so I mean, crude's not going lower until it does, and I'm just going to kind of I'm going to stay out of crude. I'm more interested in the indices. I'm more interested in gold, and bonds. I think the bonds are a super interesting trade, as you had mentioned earlier.
Yeah. No, I'm like, I didn't mention gold before. I think it started weaker and is now kind of up a scratch, right? Up 21 basis points to 45.33, and cash is up a little bit too. So we're off the Friday 4 p.m. levels as well. It will be interesting for me to see if gold starts to diverge from this performance, this cross asset high correlation performance that we've been seeing, right? Which has been equities down, bonds down, vol up, crude up, gold down, silver down. Do we start to finally this week see gold start to work? We know last week there, huge washout down to, I think, what was the low? 4,100. I mean, it was
4,100.
41. Yeah. I mean, so, big washout there on Monday. It's starting to grind its way back. If the strait's going to be something that's controlled by Iran, for a longer period of time, and there's more talk about shifting away from the dollar, clearly gold is the currency du jour that will be at the center of that. We'll see if it could start to break free. We'll get to gold. But Pharm, did you have anything interesting on the crude side before we shift over to gold?
Yeah, I can talk crude. Before I mention that, so I don't forget, if you have a non-back adjusted chart, daily chart of NQ or ES, slap on a anchored VWAP to the 2025 February high. Both of them just kissed that at this overnight low. So probably a relevant marker to have on your chart anyway. I do not have it on my Ninja chart. I will get it on there. So crude. Yeah, so we talked last week about kind of this big range here, right? Where as long as crude was sustaining below 91.69 and 93.32, we could potentially see equities hold the bid. They did, and we see what happened after that reclaim took place outside of, the Trump news wick down to where? 89.69, these silly levels, because it is a meme, futures instrument, just like NQ. So it will trade those. And now just off to the races, right? I tend to think, so first of all, okay, we're now going to need to get back below 95.69 and sustaining below there. You could call it this swing high if you want to here, 95.40 roughly. It's at least needs back below there, but ultimately back through this 91.69 and 93.32, which I think it can if there are firm offers after this kind of a move. If there are firm offers, 95.40 to 95.69, let's say, then maybe again, the bid can come back into equities. 103.69 is on there again, but actually that's an important volume profile level from a monthly profile way back in, 2022, I guess it was. I tend to think building time and volume above there, right? So not like a 30-minute candle close, not a couple of, 5-minute hammers above there or anything, but I mean, real time and volume above 103.69. to me opens up the 22 highs.
Pharm, what price? I'm sorry. What's the breakout price?
103.69 with real time and volume. I mean, these quick pops above, they get stepped on. No, that's not going to work, right? But if we're really putting in volume and time above 103.69, I think 114 for sure. And it really opens up 2022 highs for me. So I would be very, very cautious with equities on the long side. If you're seeing, I'm sure you're going to be anyway, if you're seeing crude rip to the moon, right? But you're really going to want to see this offer, call it 94.69 to be safe, but 95.69 for sure, maybe has a chance to cross back down into these 86s. It seems like we're going to need some kind of a catalyst for that to happen. And Trump's kind of running out of bullets, right? Like how many simultaneous ceasefire, not ceasefires can you have going on at the same time? I don't know. But I'm sure he'll try to come up with something. And if that does happen, that would be a risk if you're long crude to me to see persistent offers back below 95.69, 94.69.
That sucks. You just pulled me right back in. Just when I think I'm out, they pull me back in. So I already marked 103.69 on my 103.69 on my chart, and I'm going to start. When we're off the show, I'm going to start doing some crude work. So next time you ask me, I'll be ready to go, and I'll get long there too.
One other thing to keep in mind is that we typically focus on front month crude. That's where historically, well, not historically, that's where most of the volume obviously is. And so the high that was made, whatever that was, a couple of weeks ago, up and above 119. In front month crude, we're 102, so we're still reasonably off that. But if you look at December crude, December 26 crude, the high on that same day was 76.83. We're trading 78 and change now, so we are now higher now on December crude than we were back 3 weeks ago when we made that high on the spot. The high for December was earlier last week before the first Trump tweet at 81.01. So keep an eye on that level in December crude, right? Basically what the market is doing is saying, we know this is going to go on for longer. Crude's going to be tighter for longer. And so the back has moved up and has held more of the gains, let's say, than the front has. That's been part of the reason why XLE and energy ETFs continue to outperform, because the forward-looking dynamic of the market is saying crude's going to be $80 in December. These companies are going to mint money for 9 months easily, probably. So certainly what companies are doing is hedging out there and kind of locking in a lot of that momentum as well, and a lot of those gains. The other thing to keep in mind is that WTI is a little bit more landlocked here. There's obviously been talks about whether or not the U.S. is going to put export barriers, on the crude. Brent is, much more interesting if you really want to, play what is most directly impacted. The high in Brent from the 9th was 119.50. Front month Brent is back to 115.44. So we are, only a stone's throw away from the highs that were taken 3 weeks ago in Brent. And so again, the energy markets are kind of becoming a little bit more discriminating here. Brent is where the tightness is. WTI is a little bit looser. So the Brent TI spread is really starting to blow out, and Brent is very close to making highs again. And I think if Brent were to take out new highs, equities will certainly continue to struggle. And so there's just some, dynamics. I know we focus on front month crude, a lot, but energy guys are all over the place throughout the curve, different products, and the real tightness is in Brent. And so I think you're definitely seeing that dynamic play out as the strait remains closed for longer. So folks want us to shift to gold. I think we're going to go there anyway. Gold's clearly been something we focused a lot on here earlier in the year, the blow off in gold, and kind of this recovery, and kind of watching it trade after the blow off and digesting sideways, largely to down, really following silver down and the other precious, which has been weaker. But I'm curious here, Sara, maybe we could shift back to you for gold. A little bit of strength to start the week, so moving in the same direction as crude. That's new. How are you thinking about gold here?
I like it for a long, because we did what we were supposed to do last week, which was go outside month. We were talking about that, you guys know, for the past few weeks. So we did that. So we have stopped out anybody who's been long since the beginning of December. So anybody who bought after December 1st just got taken out, or they were sitting in a loss for a little bit. So now we've got a nice hammer week setting up for this week. So we would like to see it come back up through this range. And we've got all these kind of targets up here. So I like it for up. But remember, short week. So just keep that in mind if you're like playing options or something. Buy time. And silver is basically the same chart, right? We took out anybody who'd been long since the beginning of February. And we've got a green 2 down week. So we would look for a reversal back up. So as long as we're above last week's highs, we would want to be bullish. And we would target the other side of this range for, you guessed it, a broadening formation. So that's what we're looking at. And then, but again, we got to be really careful with the new month starting. What day does that start? Wednesday?
Yeah.
Yeah. I hate when a new like month starts in the middle of a week, but it is what it is. So, but yeah, as far as I can tell, you know, looks like they're trying to take last week's highs and kind of come back up through this range.
Yeah.
Pharm.
So gold's
Do you
up.
agree?
I was just gold's
Yeah.
up for the quarter though, right? I'm looking here. It looks like gold's up like 2.5% for the quarter. So
I'm
it's kind
so
of
glad you mentioned that.
it's kind of holding on,
We all-
right?
We also have to be really careful when we get the quarterly flip. I'm so glad you said quarter because I was looking at this just this weekend. We've got giant quarterly shooters on silver and gold. And so if those trigger next quarter, then you're going to see like a lot of profit taking potentially. If we, you know, break and stay below last quarter's lows, we could start kind of just like really selling off through all this. Because this is what we call it a pivot machine gun, but it's a series of a ton of higher lows. So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9. When we get the new quarterly candle, we're going to have 9 higher lows that we can take out. And that can really speed the selling up as well, because that's where stops are placed also. So people will start stopping out of positions and that'll add to the selling. So again, you know, we'll see what happens next quarter and we'll pay very close attention to that. And I will keep you guys updated on the quarterly charts as well, you know, if we're bearish or bullish. And that's kind of why you guys tune in here. So we will keep it, you know, simple and keep you guys informed on like, well, where strat wise we expect price to go.
Pharm, any key levels for you on gold here? How are you thinking about it?
Yeah, I'm going to keep it simple. And I like it. I agree. Let me scroll up a little bit here. That low's not bad. That low's not bad at all. Good location. Like Sarah said, we took out a lot of stops. I like to see that. You look at the lack of volume build down here, really got snapped up. That's not a bad low to look at. And really, honestly, I think you can work against this Sunday night low right here. If you want to be long, just work against any kind of traction, meaningful traction below this low, because what will happen is if that is lost and offered, it'll likely come back down. You could just use the value area low from last week on your chart. It's 43.38.9 on this, but you know, basically 43.40. That's where it's coming if it offers this low from Sunday night. If we continue to build volume, the clean breakaway from that primary distribution from last week after this good low, then I would expect to see last week's high come into play. And we have some thin structure to work back through from the trailing week. I'd expect to see something like 47.30s even could come into play within a week or two. No problem. This is all very thin back here after this distributive epoch over here. But work against this Sunday night low if you like it long, or 44.77, whatever you like. And then just be a little bit more cautious. Now, they still probably will buy a dip around 43.40. I'm just saying, like, it's not my style to hold this and hope. You know, if I'm long right here, I'm not going to hold it and hope all the way down to 43.40 personally on a leveraged position. But I would also start to look for dips. Maybe these lows right here get taken out, right? And then we come back up and get some kind of an internal broadening formation forming. That wouldn't be a horrible look. I'd take that right back up to where we're at now. And then see if bulls can sustain momentum away from, again, right at this Sunday's low. So I like that spot as a place to work against for this week. And then I also do kind of like a sweep of this low from whatever day this was, Thursday or Friday, that reclaims, and I'd take it right back up here. So I'd look for those two trades on gold this week.
Yeah. Pax, the other thing that gold has been dealing with is a stronger dollar. The DXY has been firm. It's close to taking out highs from earlier this month, so up to probably a little over 2 handles since the beginning of the war, from sub 98 through back now above 100 or towards 100.31. I mentioned dollar yen earlier. Now trading 160.44 last. The euro is moving down firmly below 115. It's down 20 basis points to 114.89. The Aussie, which I know is something that Blake talks about a lot, and the strength of the Aussie has been something that's been very notable all year. Aussie's starting to break down below 68.5. Australia, there's been talks about running out of fuel over the course of within the next couple of weeks. So keep an eye on Aussie there. Plenty of length still in that Aussie dollar pair. But Pax, for gold, can we start to see some of the positive divergence here, and so our gold starts to work with as a risk off asset, like maybe we thought it might, or it quote unquote should?
Yes, I think so. The dollar rally, I think, is dragging, on this gold rally. I want to be long gold. I would have liked to have bought gold at 41.39, but it happened in the middle of the night when I was in the feathers. The entry price here on gold for a long is going to be 44.81. Underneath 44.81, then we can sell off down to those levels that Pharm was talking about, 43.60 ish. I think, but underneath there we can test lower too. I suspect that gold is going to grind higher. It's going to trade more traditionally like it has most of our lives, or most of my career, where it just it's a little bit of a back and forth and a grind higher with spikes coming in. And by the way, the grind higher isn't what it was in 2014. The grind higher could be a $50 rally, $100 rally. We had what is it, from 56.26 to 4100. It's $1,500 move. In just a matter of weeks. It's huge. So anyway, I think we grind higher. I think we start to see some of that divergence. I want to be long gold, and gold has been a major part of my. I don't like the word portfolio because I'm just a trader, but it's been a large part of my long-term strategic plan for my retirement, which my family's long-term wealth, and all of the stuff that I have set up for them. It's been gold and silver, much more so than the stock market. And I'm grateful for that. I was called a gold bug by a lot of smart people, but I turned out to be a little bit smarter than them.
Actually, someone just put in the chat, and I was literally just about to say this. I mean, one of the fundamental factors that's been pressuring gold has been some central banks, including Turkey, have started to sell gold. If you think about those energy importers that are defending against weakening currencies because their energy import bills are going to be rising. I mean, Turkey is right at the center of that, and Turkey doesn't own a ton of treasuries, and so gold has been an area that they've been storing wealth, and so some of the gold weakness has been attributed to their selling over the course of the last few weeks. Some speculation that other central banks, may consider that as well. But I think if you're Japan or you're Europe, you're more likely to sell treasuries if you need to raise cash in order to pay for more expensive energy. So
okay, so that's what they're doing. They're raising cash. They're raising cash in order to now, I mean, that doesn't portend well for the energy sector, does it? So we've got central banks that are raising cash by selling off their gold reserves in order to sustain the long cold winter or the long hot summer.
Yeah, I mean, someone like Turkey has got a currency problem, and so they're selling reserves in order to slow down the pace of weakening. Someone like Japan, dollar yen through 160, that was a big level. The yen continues to weaken. Clearly, as energy prices rise, not only oil, but certainly LNG. I mean, LNG is an even bigger problem than oil. I mean, Qatar has basically announced it's going to take 5 years to get back to full production.
Yeah, like 40 billion or something.
They're in force majeure for the next few months here. As actually also in addition to that, there's apparently some cyclone activity in Australia. Australia is a big LNG exporter to Asia, so that production is going to come offline. Japan has a real issue on the energy import bill. And so as their imports move higher, their trade deficit widens out, currency weakens. And so they need to, in order to slow the pace of that down, they'll sell overseas assets. What are the assets that they have the most of? Treasuries, dollar-related assets. So some of the weakness in the bond market we've seen has been attributed to that type of dynamic in selling. But yeah, it'll be interesting to see. I think this dollar move is notable. It was notable on Friday too. I think part of what we saw at the end of the day there in the weakness in the tape, in the equity tape, was dollar yen moving through 160. Some of that was month end dynamics and some barriers, getting struck. But we'll see if dollar yen keeps moving higher here. That is risk off for sure. So definitely keep an eye on dollar yen, all week this week,
and the Aussie. And the Aussie.
Yeah, Aussie as well. I mean, the Aussie chart looks, looks pretty bad. I'm just looking here now too. And we have coming up at 7:00, as everybody knows, the crypto closeout with this week. We got Ponzi Trader and Follis will be here. So definitely stay tuned for them and looking at Bitcoin. But Bitcoin is breaking right now.
Hey,
we talked about Bitcoin at, right before the show being around 67,000, and now it's at 65,000, down to 0.2% here. In a straight line here, and I think that's moving with the dollar moving as well, and that's kind of put a little bit of a little bit further softness on equities, which are now S&Ps are down 55 basis points to 63.77. Russell's down 91 basis points, 24.41. The Nasdaq 23.195. Bonds are a little bit stronger now. ZBs are 112.16. 5 years a little bit stronger, 10 years a little stronger. So we can get to the bond. We can get to the bonds as well here. Pax, just on bonds. I know you mentioned them earlier. Before we get to Bitcoin to close things out, but any key levels you're looking at here for bonds before we turn to Bitcoin?
Yeah, watch the weekly reopen here at 112.10. That's going to be your dividing line. I cannot stress. Listen. All you guys want to trade NASDAQ because the YouTube streamers tell you that they buy, Ferraris with it. There aren't too many traders that are actively trading, that have traded as many NASDAQ for their own personal accounts as I have, and I hardly ever trade NASDAQ. Trade the 30-year bond, or don't sleep on it. The bonds are a great trade. And as I showed on my Friday show 2 weeks ago, it's manageable. You can manage your risk quite well, and we've got huge moves here. Okay, so 112.10. If you want to trade the 30-year, you can have gotten long right off of that or short below it. Just use that as a pivot, and then you're going to take that up to like 113.12, 113.14. Take some profit on it. Long term, I think the bonds are in trouble. You guys, there's been a lot of talking on social media, on X, at least in my feed, about buying dips in the indices. We're going to be at all-time highs by the end of the year. Okay, I don't see it. I hope it, for the sake of, I don't know, for the sake of the health of the country, I suppose it would be a great thing. But we have to prepare for we can hope for that, but we have to prepare for something different, and something different right now seems to be playing out. So if you like to be long these markets, because that's, whether you're talking about S&P or bonds or gold or whatever, you like to be long markets because that's what the market has done since you started, is it's been a buy the dip market. Then define your dips very, very clearly, and don't get long until you're at your risk. You want to be long the S&P. Wait until we take out 53.80, the high, or 53.80, the opening print. Get long at 63.80. Get long at above 63.80. Take profit at 63.89. If we go 89 bid, buy more. But if we stay below those levels, look to trade it from the short side. The S&P swing from the quarterly pivot completed on Friday at 64.40. Underneath 64.40, the next level completes at 62.86. 30-year bond, okay, we're a little bit stronger on the weekly reopen, but the bonds want to trade down to 111.11. Happy 11.11. My wife and I tweet that every time we see it, or text it to each other. So 111.11, and if we take out 111.11 on the downside, it's going to be 110.01. Underneath 110.01, we're down to the 107, 108 handle. That takes us down to levels that we saw in like the 2000s. So just be careful, okay? These markets are going to be tradable. There's going to be a lot of money to be made, but you need to protect that money every time you make dough. Don't size up just because you can. Just don't size up just because you made some money. Give yourself a chance to progress, into a long-term profitable trader. It takes a year, 2 years, 3 years, 4, 5, 10 years to get good at this. And even when you are good at it, you cannot ever leave your risk management behind. That's the name of this game. Keep it simple, keep it objective, keep it actionable, and keep that risk tight.
If those levels get hit in the long end, we're going to be dealing with a different handle. We're going to be dealing with a different handle on the S&P for sure.
Yeah.
It's sure. Not going to be. It's no longer going to be a 6.
No. And I think.
What would it be?
It will be we'll be back down. In my opinion, we'll be back down to 56 even 59.40 is I think where the S&P wants to go, down to 56.40. That'll be 20%. And then we'll see last year's low, which is also the yearly opening range for 2024, 48.18, 48.34, 48.08, 48.08. If bonds get down to 107, 108, that will be trading someplace around 5,000. That's my guess. What do you think, Craig?
No, I guess for me, I think we will. It will happen quickly, right? I mean, I think if if the market starts to flip out about the long end and 30-year yields being above 5%, the 10-year back above 4.5 on its way to 4.7, 4.8. Well, I think equity markets are going to react violently and quickly.
Yes. Craig, what's the catalyst for that?
The catalyst is what we're seeing. The catalyst is that the strait stays closed for longer. People start to, think about deferred crude, being at 90, 95, 100, and spot crude going to, 130, 140. I mean, one thing that could happen, and hopefully it doesn't, is with the Houthis entering the dynamic here, if they start to put some pressure on and close, the Red Sea, or possibly attack, Saudi assets on the Red Sea, crude will be limit up for days, right? So that's the type of environment, obviously, no one wants to see. But if that's what we get, you'll have that big gap up in crude. Bonds will get sold, in a big way, and equities would violently react to that,
right.
that setup. So, but hopefully, we're not dealing with that.
59.40 is my target for this move in the S&P. 154 handle runs, 154 handle swings, down to 58.40.
Yeah. Bitcoin,
59.
last asset. Yeah, let's close it out here with Bitcoin. Showing some weakness. We talked about Bitcoin for a while on this show as kind of being this leading asset that had never really followed equities higher and risk higher. It's kind of been struggling for a variety of different reasons. Tried to find some strength over the course of the last few weeks, certainly on a relative basis versus gold, and wasn't really clear what the narrative was, but it was doing better. It's starting to do worse again. Sara, any key thoughts here on Bitcoin levels?
Yeah, it's doing the same thing it did back here, like almost exactly. Hold on. Like we made some new highs back here in January, and then we fell all the way back through this range, taking out all those lows. And that's what's happening here as well right now. We're still in this mother bar, so we're still an inside month. If you go to the monthly chart, we are an inside month, so we're still stuck in that. Was it a 1 week candle? Yeah, still stuck in the weekly candle from 2-2. But we're making an internal broadening formation. So I still expect lower prices, especially with the new monthly candle opening. We can go inside month and down and easily hit this, 49,000 target. And then once we get there, then we'll start talking about the 38, which I'm sure the crypto people hate to hear that, because coming from 125 and we've got 38 on the chart, like that hurts for the people that, didn't take any profit anywhere along the ride up. But yeah, so I still like down.
Yep. Pharm, if you promise not to tell anyone else what else is in the prison pocket, I'll give you the last word for the week here. Any final thoughts here on Bitcoin or anything else you're looking at?
I'll just add on the dollar and the bonds real quick. The dollar, if you're looking at DX futures, this is interesting. I mean, above like 100, spot 69. I said spot because I wanted to sound really cool like Jimmy Cags. But I mean, like really, I mean, it can go to 107 big picture. It's not, I didn't misspeak. Like it can go to 107 above about 100.69. That would be an insane move. And all the people calling for, the death of the dollar would be eating a whole bunch of shit. But that is a big picture could print. On ZB, I would actually love to see a little bit of panic to take out those May lows. Just a quick push into about 109, maybe 108. High 108s though. I mean, 109, just a quick peek below that May low, sweep it out, just kind of like crude did, right? Remember how long we waited for crude to take those April lows? I think it was. I don't remember. Whatever month it was. We like all of us on the show were like, take the damn low, and we're gonna look to get long. I'd look for the same thing on the bonds because at some point, I mean, it obviously depends on the news cycle and what's going on, but I mean, at some point, if there is some economic weakening resultant from some of this energy issue, and there's some resolution, I think that to me is a long setup to come back all the way back up to like 119s or some crazy shit, where then we of course ultimately end up selling them back to zero and negative infinity because we can't stop printing. But those are the couple of things I'm looking at there. Watch this 146 to 162. You can tell everybody's bidding it because I said I was going to go to Cheesecake Factory tonight. But I'm going to try not to eat anything but a Caesar salad. But there is kind of a lot of calories in that. So that's probably what this bid is about.
For sure.
It's not the level there.
Well, that's all she wrote for us. It was a great session, guys. Next week is Easter Sunday, so we will be off. And Pax, happy Palm Sunday today for you and your family.
Thank you.
And happy Easter to you for next weekend as well. But that's it for us here on the Sunday Open. It is now time for the crypto closeout with Ponzi Trader and Follis. Take it away, guys.
Hello. How are we doing, Follis? My trader main replacement.
I know, yeah. He ditched us to go do better things, I guess.
He just doesn't care about crypto anymore, but who could with this price action? It's been absolutely disgusting today. Thank you guys for the Sunday Open. Now it's time to talk about some horrific crypto prices.
Yeah. I mean, that's
disgusting.
an interesting point to even start at, right? Is like the sentiment being in the gutter and how everyone is saying, oh, it's never been so bad. Everyone's leaving crypto. No one's staying around to trade, et cetera, et cetera. But I don't know. I mean, you've been around longer than I do. How does this compare to previous cycles? I only have one cycle to compare it to, which was, or at least cycle low, which was 2022. And to be honest, like this just is more of the same to me. It's pretty standard. Capitulation, pretty standard, emotional lows, frustration at price action and things like that. I would argue that actually 2022 was worse, but we're kind of seeing that now where people are getting angry and frustrated, calling crypto a scam and leaving the industry for other fields.
Yeah, I mean, we're seeing real life capitulation at the moment. What we saw over the last 2 weeks specifically was Mara dumped $1.1 billion in Bitcoin. That's 15,000 Bitcoin. They went from being the second largest Bitcoin holder to the third largest Bitcoin holder now, but behind 21 Capital. That in itself is a massive sign of capitulation from an institutional level. So it's both going to be a price capitulation and a time-based capitulation. It's inevitable. It's cyclical. It's just ironic that, Bitcoin's at 66,000. Last cycle, it was a little scarier. So, I mean,
it was scary. And we had market ending FUD. I mean, people don't seem to realize, but there was like Voyager, Celsius, Luna, FTX. There was all these things that were effectively, there was a chance they were going to end the industry. I don't think we're quite at those levels yet, but people are saying, sentiment's never been worse. I think that's almost a short-sighted view because, all you need to do is cast your mind back a couple of years to see sentiment that was probably even worse.
Yeah, I mean, and we're seeing across the board too. Another headline, Lido, LDO, they're planning a buyback of $20 million. So it's a proposal for now, but their revenues are down 23% from last year. So across, every facet of crypto, we're seeing revenues down. We're seeing just lower numbers everywhere. And, it's part of where we're at. That being said, I did take a trade this morning. 5 minutes ago, I already closed it. Caught some of this downside Sunday, low liquidity, scammy price action, and I just closed it. Honestly, I wanted to see, I still think we see 66.8 back up into this area, but I literally can't be bothered. I've been a crypto trader for almost 10 years now. And for the last 10 days, all I've traded was oil, SPY, NVIDIA. Like it's crazy.
Right.
Obviously, I'm
Yeah.
trading crypto perps, right? But the instruments themselves are representative of other assets. And like, it's the first time in my life where I'm trading minimal crypto and mostly, traditional finance instruments. But this, I have a little too much of a cognitive bias to be trading this right now. I still
Do
think
tell.
this chart was from last week when we were on here together. I haven't touched it. We failed to take this 74 high. And this is where I see this is what I'm expecting 50s now. And if we zoom out, it's really just going to be that third drive lower. This to me, bear flagging looks gross. It's inevitable. We're probably going to get a headline this week, and we're going to be trading down into this 50 region, which I will trade very aggressively and low leverage, but I'm expecting a pretty good reaction from this 50 level, whether it's, wicks down to 44, whatever it ends up wicking to. I want to see like a nice swift demand in that region for probably a pretty good trade, whether it lasts a few days or a few weeks, depending on the demand that we hit, how many liquidations we get. Probably a multi-billion-dollar liquidation day should make for some good trading. It can be pretty exciting. That's the type of spot where a lot of money is made, and I'm loaded up for it. That being said, as well, speaking of headlines, this to me is incredible. I saw it on Twitter. I mean, I think it's inevitable that U.S. forces are entering Iran, right? And we're seeing April 30th trading at 72. In my opinion, they're selling 72 cents for $1. Sorry, they're selling $1 for 72 cents.
Right.
It's inevitable. I think this conflict is just going to escalate all week, all month. The strait's still closed. Nothing's changing. And Iran is, pretty gung-ho in their positioning. So this may pair well with this Bitcoin trade that I'm expecting. Whatever headline we get, and anything can happen between now and 50 or 45, whatever we want to call it. Like we could see something like this, but inevitable, it's here. This is where I'm going to take a pretty aggressive long. And until then, I'm not really too excited to touch crypto. Like this range has just been not great. Have you been taking any trades the last few days, and do you plan on any?
The last few days, no, but I have, because I've just been away from the desk. But I will say that, I mean, this is something that I spoke to you guys about a couple of weeks back when I was on the show as a guest. I mentioned that range-bound PA is kind of my bread and butter. I quite like it. I trade it quite well just because of how rules-based it is. And something I said to Maine at the time was that I remember watching his streams back in like 2021, and he was saying, where ranges are where you try and get bearish at the highs and bullish at the lows, and there are a few different rules that you kind of follow in order to adopt those biases. And I think that this range has been pretty similar to previous ranges, previous value areas, previous channels, whatever you want to call them, that we've kind of seen in the last couple of months, right? It is a high time frame downtrend, right? You're expecting this range bound price action on the low and medium time frames to resolve to the downside, and I think that you are right in as much as you're looking for that further downside. I think that the macro supports that view, where we're kind of trading in this market where there's a ton of headline risk. And like I'm the first person to say, like, I'm a technical trader, right? I'm a TA guy, I'm a technical analysis guy. But when there are headlines flying around, like, it doesn't matter that BTC is trading at strong support, right? That doesn't matter if Trump announces that World War III is starting tomorrow, like risk on assets are going to nuke, right? And that's why I always try and say that, like, it doesn't matter if you're a technical guy. Sometimes there's just going to be a backseat that you have to take when there's a this much headline risk in the market. Now, that being said, something that you just mentioned there, you're saying that the right headline, the wrong headline can kind of send price one way or the other. I find it hard to flip bearish here. I was vocally bearish on the show 2 weeks ago when price was trading up into the 70Ks. I was saying that this looked like range high price action to me, and that any kind of weakness here was probably your trigger to short, and you're looking for a rotation back down towards the range lows. But by that same sentiment, we're now trading at range lows. We're now at support. We've now taken some major sell side liquidity levels. I just don't think that this is where, if I had been short from the highs and and traded this short, I would be out by now, and I'd be kind of just waiting for the next setup. I think that something that a lot of beginner traders do, and maybe you can speak to this as well, is and I'm sure you've seen it in your career, is like following the move, but following it too late and coming into a move late and then getting hurt because you see this move from range low to range high or range high to range low. And by the time it's almost played out and like smart money has already exited their positions, you see these guys like jump in and they're like, oh shit, this thing's going to the moon, I got to get long. Or like, this thing is dumping to Hades, I got to get short. And they're the guys who actually provide the exit liquidity to the guys who were positioned from much earlier. And that's something that, I mean, you've been in this game a lot longer than I have. I'm comparatively a bit of a rookie, but that's something that I've been really working on in my own trading, just trying to avoid that sense of FOMO when you see a move play out and just waiting patiently for the next setup.
Yeah, FOMO is the mind killer, and that's like the most detrimental thing to a trader. And it comes with, overcoming your own psychology. It becomes a you versus you type of game, and this type of price action leads to FOMO in the wrong way. Well, I mean, FOMO is always the wrong way, but FOMO in the sense that people are chasing their P&L. They're trading their equity curve. They're no longer trading the chart. And that's when, massive mistakes unfold. So I personally I'm not excited to trade this. I know my edge. I know my edge in crypto specifically, and it's not in this price action. Like you said, we're in the middle of this range. What is there to do? The only thing that you can really trade is like, irrational extremes. Like this move I just caught, not a crazy move, but enough to capture some points. And now that we're back into this point of control, this lower time frame point of control, like what am I going to do here? I don't have anything to do. So I'm still holding my TradFi shorts and my oil longs. I really like what Pac said. Everybody's anticipating indices being at highs by the end of the year. I'd love that for the sake of our country, but this isn't like last year. And I have a really good retail friend, and he's my best friend, but he's a great retail indicator. And he said last March, I saw my portfolio down whatever percentage it was on Liberation Day, whenever that was. And he said it's going to be the same this year. And I'm like, dude, that can't be your frame of reference for making investment decisions. Last March, we bounced off of some, headlines. Is that really how this year ends? No. But that gives you sentiment. That gives you a really good understanding of sentiment in like the traditional retail world. So everybody's expecting this to just be a taco. I don't think this one ends that way. And if it does, it'll be another short opportunity. I don't see this. Oh my Lanta, I haven't really looked at this since Friday.
Yeah. Talk me through your oil trade, because it's actually something that I've been talking to my guys a little bit about. Like a lot of the crypto exchanges that we're trading on now are actually offering perp contracts based on commodities like gold, silver, uranium. Not uranium rather, but I think it's palladium, and then like oil contracts as well. So there's actually like, through one way or another, there's a lot of crypto guys kind of getting this exposure to precious metals, to commodities like oil, and it's coming at a time when the zeitgeist is kind of in one way or another pushing crypto traders to kind of look at these assets, even if they're not trading them. So talk me through your oil trade.
Yeah, first off, I want to say NATO finally listed oil. So that's really exciting. And a bunch of Forex pairs. So if you're trading crypto perps on decentralized platforms and want to earn rewards, NATO is probably the best place to do it right now. With that oil trade in mind, it's like I'm traditionally a technical trader. I look at charts and I see patterns that I've seen for 15,000 hours of screen time that I reference in the back of my head and think, this looks like this looks like that. Oil is the first time that I'm not really using that frame of reference. To me, it's a very fundamental trade. Everybody is mispricing like what this actually means fundamentally for the straight to close. Even if it opened tomorrow, sure, we could get a headline bounce, but the recovery that it takes to get oil back into a sustainable economy based on just movement to other parts of the world is a lot longer than people are pricing it. And I don't think this war ends at all in the next 10 days, 20 days, 30 days, 60 days. So if the Strait stays closed for another 2 months, the demand for oil and the supply, it's just simple supply and demand economics to me. So I paired that with also trading this chart slightly. These lows that we saw, slightly higher low, like that wasn't, this was the first long I took on oil. I took profit somewhere here. This is the second long I've taken on oil, and I've been posting it, for the last few days. I've done nothing else except long the 90s. And, nice, now I'm nice in profit, but I think this trades at 120. I think 95 is like the new floor, as long as there's headline risk, obviously, as you can see these wicks, but as long as nothing changes with the current conflict out there, that this is going to trade significantly higher on a fundamental level. There's not much to chart, right? Like if we zoomed out on a daily, on a weekly, like this isn't really an easy technical chart to make decisions off of. So I try to actually avoid looking at the chart at all. I'm really just watching headlines, paying attention to news. We have a guest coming on in now, Rob Woods. Let's bring him on and pick his brain. He's a pretty legendary trader that I haven't been able to catch up with in the last 30 days, but curious where Rob is with this exact conflict in mind, and how he's positioned. Rob, how are you?
What's going on, guys? How you doing? What's up, Ponzi? How you
Dude,
doing,
it's been
Follis?
too long.
It has been a while. We got to get a workout in soon.
Yeah, I like your setup, dude. I haven't seen your new house yet. I'd love to come by and check it out.
Yeah, I appreciate it. Definitely, bro. You got to come through, check it out. You're always welcome. First of all, I want to give props to the new stream here. I like the innovation. Anybody building in the lows is going to very much benefit in the highs. From my experience, I know that always works. And that goes in relation to the market as well. You also killed the trade last week as well on this stream. 72, perfect.
Yeah, I've been pretty spot on with the prices, but I haven't been trading crypto so well. Everything else I've been trading fairly well. So it's been entertaining. But tell me, Rob, how do you feel about current crypto prices? High time frame, low time frame? Are you scalping? Are you putting on positions? What's on your mind?
Yeah, so plain and simple, we're in a range till proven otherwise. There's scalps to be had, like a level we just pierced into right now. From my perspective, like this is the obvious range. I like to play these wicks above as like closure references. So whenever we start to close above or below, I can sort of make my assumption that we're going to either deviate, look for confluences to do so, and take a position on that from these levels of extreme, or I look for a flip of that level. And we have not broken above the highs significantly for continuation, and we have not even seen closures below where I would consider the extreme end of the range at 62.6. We're trading towards a value area, which I think for scalps isn't so bad here intraday. And really that's what we're seeing on the lower time frame and pretty much the higher time frame if you want to consider it weeks, months. We've been in this range since the beginning of February. You can't overcomplicate what's like right in front of you, is what I tell people like all the time that ask me about my perspective and sort of how I see things right now. So until one side is broken, I'm not going to be really looking to position even so heavy. And I'm okay with missing a move or being wrong as well in the middle.
Yeah.
If I decide to, do that.
Yeah, it's so important to know when not to position, number one, and when you can accept you're wrong. That was my biggest issue when I first started trading, was cutting losses. And like now I can cut a loss on a position and just be like, oh, over it, move on. But for a very long time, I try to hold a drawdown and you bring my invalidation lower and say, no, maybe I'm just bringing it down because if I get wicked, I don't want to get wicked here. And my invalidation was there for a reason. And I, kind of psyched myself out of it and lost more money than I needed to. But yeah, I like your chart, honestly, the way a little bit of a zoom out, like I really wasn't looking at the daily there. This is a demand area, right? Like it's not a bad place to punt. It's a Sunday afternoon. I'm not excited to put a position on right now and sleep with it. So if we get any more, downside into the 65s region tomorrow morning, I'm probably going to look for more longs.
It's range low support, but it's just there's so much headline risk. It's impossible, as you said, it's impossible to sleep on a position with any kind of confidence, because if the wrong headline comes out while you're asleep, you're just going to get knocked out of your position. Woods, I'm curious to know, is there a level for BTC on the slightly higher time frame that is an automatic buy for you, or maybe you've already started scaling into spot. Presumably you have, a kind of a high time frame bullish outlook, as most of us do on BTC. There's a level at which you want to accumulate. What is that level for you?
Yeah, no. So first of all, like Ponzi, me and you have talked in the past about, I mean, even how like I position in certain positions, how you position. And I mean, like you are a wild man, bro. So to see you grounded is a beautiful thing. And that comes with years in the market. I mean, it's like, yo, why do I want to lose everything in a range that's been trading for a month and a half? I think that people want to make and try to full port that next move that's going to happen out of this range, because there's going to be a move. You might miss it, you might hit it. You're not trying to even catch really the full move, in my opinion. If you're a seasoned trader, you're more or less looking to catch the meat of the move anyway, and that's where people are going to get blown out. So yeah, kudos to you, and I feel that as well. I don't feel like there's a need to be in a position every single day, but acting, I mean, I like trading every day. I have a group that I trade in. I'm here on Twitter every day. It's a routine, it's a habit. I mean, I'm naturally going to look for plays, but knowing when to size up, size down is key, like you said. And to answer your question, Follis, like anywhere near this sweep for me is a buy, and that's going to be that 62.6 region where that candle wick is. I'm still in the belief that we're going to tag 80 before 60. So like I said, I took scalps here into this drop down. And I agree as well with you. Tomorrow, if we do look to drop down into the lows and maybe sweep or print the higher low there, that it is an area to long in anticipation for that 68, 69 region. I tuned in on the tail end of you saying that we can, and you, Ponzi, saying that you see us potentially going at 68, 69. I don't know how high you think your bias is intraday. But that's pretty much what I'm looking for here. Like I said in the beginning, I don't want to overcomplicate it because it's not worth overcomplicating. On the macro time frame, I always hold a little bit of Bitcoin. I always hold a little bit of like everything that I like Ethereum. I mean, even though I hate that, but that's just who I am and how I've always been. When it comes to adding things, to your point, Follis, I'm focused on putting money where the first movers are, and hype, Tau, Zcash, Fart Coin, like coins like this is what I'm gonna put some money in whenever that time comes. But ultra crazy.
What's the Fart Coin thesis?
It's a first mover when it comes to memes. If memes are here, Fart Coin's the first to move. So I think if you're looking to gamble a little bit when it comes to like a known coin, I don't think that's a bad one to keep in your basket. I mean,
there was a period last year where like Farcoin was the litmus test for going risk on or risk 100%. Off in the crypto market. Like, and that lasted like 9 months, man. It was pretty crazy.
Dude, it's interesting because like if you're not a crypto, native and you've been listening to the show or you've been kind of paying attention to crypto, but you're not like fully involved in crypto, and you just heard Rob say that Farcoin is something he's buying, right? You're like, that is insane. But from our perspective, it really is the barometer for risk on. And if you get the timing right when assets get a small reversal, and say we've been on a downtrend for 6 months, you start accumulating a little bit of the risk barometer, the highest beta asset in an asset class like Farcoin. When you do catch that trend reversal, it is the most rewarding because that bounce becomes like a 2 to 5x. Say Bitcoin bounces 10, 20, 30%. High beta assets like Farcoin are ripping, multiples. So it's cool because you can position yourself fairly small and still capture pretty high beta. And if you do it at the right time, it's the most rewarding shit ever.
And to your point, you have a lot of screen time, as do I, as do you, Follis, and as do a lot of the viewers watching, I'm sure. I mean, there comes a time where you learn this pattern recognition. Obviously, you see a lot of things all day on the chart. You can kind of, even like playing in your face right here, which is, in everyone's face, like this literal exact sort of pattern here. But to that point, you have pattern recognition, but you also have price recognition. You have like first mover recognition. You have what's the strongest. So you realize that over time and shift that way. We saw in 2020, 2021, we saw AVE, coins like that in the DeFi region. We saw a shift to memes, and then a shift to AI. And now, it's up to us to realize what's next and really execute on that. You do a fantastic job farming like things that you have conviction in. I'm not too much into that. Like I do other things that I take advantage of, but that is a huge a huge topic that you've been covering on lately that I should even look to get involved in. And my point being, I think everyone should open their eyes to things that they weren't once involved in or even learning, because times are always changing, space is always innovating, there's always opportunities, and there's a lot of time right now. I can't stress enough, like anybody building right now, learning a system, creating your plans, a routine, whatever the case may be, because first things first, like routine is everything. And I think that anybody doing that right now is going to benefit highly when the noise comes back, because that's inevitable.
Well, I mean, it's adapt or get left behind, right? And this is something that I think that you guys will have seen. A lot of OGs in the space, a lot of guys who were, posting huge P&Ls back in 2021 and probably even earlier before I entered the space. A lot of those guys now have gone either quiet or silent, or some of them have been pretty forthcoming about the fact that they just can't make money in these markets. And I think that that is one of the major skills that you need to have as a trader, is this ability to adapt to a incredibly fast-moving market, right? It's a nascent market. It's only the futures market has only existed for just over a decade, right? So in those initial stages, obviously, there's going to be a lot of movement, a lot of quick changes, especially now with institutional involvement, sovereign nation involvement, government involvement. So it's like at some point it becomes not how sharp you can make your edge, but how quickly you can adapt it to the next market paradigm, and how well that you can adapt to quickly shifting market conditions, right?
Yeah, I mean, the best example of that is when the pit traders got, they didn't adapt. Pit traders absolutely crushed it. A lot of them just didn't adapt to technology. And as computer execution became, more prevalent in home offices, homes, a lot of people lost their edge. And I will say this, I can say this now because, it's been a while, but a few months ago, this individual on crypto who I've literally idolized for as long as I've been in the space. I've followed him forever. He DM'd me and was like, "Hey man, can I borrow money?" And I was just like, wow. Insane. These guys that you put on a pedestal, like that have absolutely crushed, BitMEX leaderboard style crushed, are out here, just blowing up. So in the long run, if you don't adapt, and the even worse than not adapting is not knowing that you haven't adapted and taking a step back, because being cognizant of the fact that you're not catching up is more important at that point, and cutting it off and then reevaluating. And that may be us in 5, 10, 15 years, whatever it is. Thankfully, 10 years here, I'm still here alive. So
yeah, no, especially in this space, like you got to take a big enough loss to learn a lesson. I'm telling you, in this space, man, it's like, and then if you don't learn from that lesson, it takes a bigger one. But no, to like jump back to that, when you talk about like having an edge, and I think that is important more than anything. But in a range, it becomes like, it becomes extremely, like, you just keep repeating yourself and looking at the same chart. And all that being said, you need to execute when these levels come, because things move slow, they can move fast tomorrow, and then you miss a move and you feel like you got to catch it and feel that FOMO that you were talking about. Liquidity fuels the next move, and for me, liquidity is means more than anything. That's why I like these zones. That's why I like these wicks, and I take that and I try to simplify it as just that, like wicks. But that's where people were playing. That's where the volume was, and that's what's going to fuel the next move. It can happen from here up to here, right back down to there. It could happen here, fuel the move up here, take these highs and then back down. There's a lot of things that could happen. It's up to us to react. And I think that doing that over time, I've learned that automating my system and my Confluence that I use has been a great help. So, I mean, there's a lot of ways to do that. I think AI has taken a giant step in that direction over the last couple of years. If you caught that early, you had a lot of time to prepare. And I think that now more than ever, like, you could take a lot of these like tools to your advantage to automate your system so that you're not always stressing a chart. You can actually go enjoy life and not feel like you're missing out on things. And it's only a notification away, So that's kind of, and I mean, when it comes to economics, and like, I don't know if you guys touched up on that in the beginning, it's like, I don't want to go too much onto that. Like whatever's happening is going to move the market, right? In like the range. That's what it is. It's meant to do that. It's meant to chop you up. The move's going to happen regardless of anything. So just like size up appropriately to anybody watching and having a tough time. That's pretty much, like how far I want to go when it comes to like that economic stuff. I mean, it moves markets, obviously, but just try not to get caught in between like the wrong move.
Yeah. Would I want to talk about the fractal that you kind of highlighted there at the start of your discussion? This is obviously something that a lot of people have been talking about. This, the range playing out, the range that we've been in since February playing out in the same way, maybe that the range we were in between November and January playing out. So I want to ask you, like, what's your opinion on these? Are they just memes? Are they just people engagement baiting, or like, is there any truth to people just drawing price action in the exact same way that it played out and saying like, oh, there's a decent chance that this will play out again? Like, what's your take on that? And is that something that traders should be paying attention to or just completely ignoring?
I answer a really good question on a lot of different aspects. One, I think pattern recognition is a real thing. What happens in the past is going to dictate what happens in the future. It does not mean it's going to happen, but it can. And to your point as well, like, should people trust the other people looking to engagement farm? Because that can be an aspect of it. Is that wrong? No, I think that's a beautiful way to market. Engagement farm all you want. I'll post a chart. I don't care what people think on Twitter. But I think that other people believe in it. And if it's your choice to believe in that certain pattern, put your opinion on that, and you want to go all in on this range because you think we're going down, then you do that. But there's people that I follow even on Twitter right now, and I keep my post notifications on for those specific people because their confluence is matched with me. When I start to find that like other people's opinions are starting to fluctuate with mine, that's when I start to take losses. And that's not to say that their opinion was wrong or to blame anybody else except myself. But when I make a plan and I like to use these certain people as confluences for me, that works, in all the right directions. And there's like now more than ever, you can find who's just here to engagement farm, who's here to just post, or who here's actually putting in the work and giving you actual levels of inflection that price is going to react around. Maybe not tomorrow, maybe not next week, maybe the month after.
I'm really glad you said that, Follis, because I saw this tweet today. I want to share my screen and show this because everybody knows who Michael Burry is, of course. But this is without a doubt a very incredible statement. Humans have been the same for thousands of years. Obviously, we've adapted slightly to our environments, but humans are essentially what are creating these patterns on the chart, right? It's just buyers and sellers within every market, and so you do see these fractals play out just like they have in the past because it's the same humans trading these markets. And this tweet was written today by, I don't know who this guy is, but about Michael Burry. He read a book on Wall Street traders markets from the 1870s, and he threw a little sticky note in every time he read something about how institutions or people acted like they do today back then. And you can see there are a lot of sticky notes hanging out of that book. Fractals they're not perfect, but if you line them up with every tool in your chest, and you say you have bearish headwinds, there's headline risk, and you're starting to see what looks like a bear flag. And in the past, that bear flag has shown to break down, right? Like this Ethereum chart is probably a really good way to display that. You can say, is this fractal? Like, are you really trading based off of fractal? No, I'm not trading based off of this fractal. I'm trading based off of the environment that we're experiencing at this moment in time. That environment tells me we're pretty bearish. Well, I happen to also see this fractal on the chart that shows me, maybe price has reacted to a headline in a way that mimics what we've seen in the past. So I don't think fractals are a meme at all. I think fractals really represent how humans react to headlines and environments. And if you use all of your tools in your chest, then you get a pretty good edge in understanding how and when to use fractals. Of course, there's a large time when fractals might do this instead, and it's like, oh, it looked like it should have done this or that. But that's why we adapt as traders, and we use risk management and cut our losses and, base out. We elaborate based on what the market is giving us. So yes, fractals are real. And I say real because there's a lot more intricacy to what that means. So yeah, fractals.
It's also one of those
No, I
things
think
where
that was
like
a
I feel
great
like
take right
people
there.
have
I like
this
that.
assumption, especially beginner traders, that like if some element of your technical analysis doesn't play out, let's say you use it once, use it twice, and it doesn't play out, then you're like, no, this is bust, this never works, right? When it's like actually you're not really trying to get that 100% success rate with technical analysis. It's really just giving you that tiny advantage that turns like a full coin flip into something that you can actually build an edge from, right?
Yeah.
It's like what's the house advantage in the roulette wheel, right? It's like 2 point something percent, right? And that's all you're really trying to do with trading with technical analysis, is like develop a risk adjusted edge that you can make money from, not by being right all the time, but by being right enough that you can extract money while also protecting your downside when you are wrong, right? I think that's something that like a lot of guys just don't understand, right? Is like building a profitable system isn't about being right all the time. It's about being right just enough and accounting for the times where you aren't right, right?
Yeah, it's about consistency in your strategy as well. Like you're not going to want to be flip-flopping from, and I think this is where a lot of people mess up, is that we're in a range and there's a lot of scalps to be had in between. You're deviating away from your macro strategy when you do that in your head, psychologically. And then a move might happen that, Trump makes a tweet and we break straight through your level, and now we test a real level that you were interested in. You just we're executing on a small level. So that tunes in with what I try to stick with my system as well. I try to be super consistent, patient if needed, sizing up and sizing down at certain zones, and for every reason. I really like to play economic events as well, because that's a given mark for volatility. It usually always is, and it's usually the inverse on reaction. So I like to trade on those days as well. There's certain times where I won't trade leading up to those days. I'll wait for those days to trade. Like all that tunes in with what you keep saying, Ponzi, is that pattern recognition. There's a lot of things you can do as a trader that go outside of pattern recognition, recognizing other things that are happening in the market and how price moves around those times, even like holidays.
Speaking of pattern recognition, what do you think happens on this Sunday into tomorrow's open? Every Sunday consistently has been a fadeable Sunday. Whether it's a pump, it's been pretty easy to fade, and vice versa. What do you think happens tomorrow morning? What are we expecting from markets?
So for me in particular, we have monthly close as well. So this is a little bit of a trickier situation.
Oh, yeah.
I'm scalp long from the lows around here. And we also have a holiday coming up as well.
Show me the monthly chart.
A Jewish holiday. So I'm gonna tread lightly. But let me make this a little cleaner. So this is the monthly chart right here.
Oh, that's ugly. But yes, in theory, massive demand, but that demand box can go
saved. It can be saved.
It can be saved.
Oh man, it can be saved. Jeez. Yeah.
But yeah. Oh,
one thing I would love to ask both of you, and this is a question for you, first of all, Woods, because you mentioned the fact that, let's say if BTC starts breaking down at this range, you're kind of happy that, if you miss the move, that's fine. But let's assume that you catch the move. What do you need to see in order to ride that move, let's say down? And the flip side of that is also like, what would you like to see in order to catch, let's say, some kind of reversal followed by a breakout, right? Because something that, and this is, I'm speaking from my own weaknesses here, something that I do quite well, and it was what I was talking about with Ponzi at the start of our live stream is, I trade ranges quite well, but what I don't trade well are breakouts or breakdowns. So actually, normally I find when price is ping-ponging in a range, I do quite well. I make quite a lot of money. But when price breaks out or breaks down, I'm usually sidelined. And that's okay. I've come to terms with that as, for my trading style, that's just the way it works. But I'm curious to know, because I've seen you, Ponzi, I've seen you trade breakouts before and breakdowns. So I'm curious to know if BTC is to break down here, let's say we get an awful news headline tomorrow. Let's say boots on the ground in Iran. There's an escalating situation. World War III is knocking on the door. What do you need to see, and what's your trigger to get short and ride that move to new lows?
So I mean, I'm a big supply trader, and if I'm not tagging a nice level of supply, which when you're in a range, it's very rarely for that to happen. The only level of supply we had was up here, and I executed shorts on that. And like you were saying, I tuned and I heard your point as well, where you take TPs too quick. I have a strict regimen that when I'm in a range, I'm taking profit regardless. A lot of people want to hold an opinion and in aspects of the market that I feel are too early. And that's the way they trade. Like if you want to short this level before this pop up and you want to hold and unrealize all that profit and just hold it through all this move, that's cool. That's fine. But that's not how I trade. I like to trade in a range at extremes. I'm okay with missing moves. I'm okay with taking profit. I'm okay on flipped confirmations that I miss moves occurring. And let's say I'm not there to catch momentum on the way up lower time frame. I'll wait until the first initial harsh rejection and see if that's a means for continuation. And I should look for lower time frame deviation setups or flags building up before a breakout, or if I should look for a limit lower and just look for a level of demand without actually pulling up my chart right now. But that's pretty much what I think. We have a similar take on how we trade and how we take profit. Like I said, if I'm taking a trade, even right here, I missed right down here, I missed 65.2 is what I wanted on this drop, and we reached 65.6. So I waited and I caught a move like right here on this flip for this move up. I'm taking profit, and honestly, I took profit before this even happened. So I'm taking profit into this wick, and I'm okay with that because this is an area that I'm looking to short naturally. So that's just kind of how I play things, and that's just speaking from a mid-range perspective. And I already told you I was in a position kind of from here already, just off of prior liquidity and scalping a little bit light. I don't think there's any problem with taking profit. I think people should look at taking profit like taking an entry on its own, because you're taking profit on the adverse side. There's a reason for you to take profit if you're taking profit at those levels.
Someone in the comments asked a really good question on my oil trade that actually parlays off of this very well. He said, if you stop trading Bitcoin because of the shittiness, why do you think the CL chart will be different? I understand the trade, and I thought same thing last week. Beware round tripping, congrats. And this goes well with what Follis just asked. I'm not a good range trader. Well, I am a good range trader in terms of understanding how the range works. I'm bad at I have too much belief that the range will break sometimes, which makes me a really good breakout trader, trend trader. And that is kind of why I'm succeeding in oil, because I don't think it's ranging. And I think it's
that's
trending.
Why you're finding crypto so frustrating at the moment, right?
Exactly that, because it's ranging. And so I'm now moving to assets that I think are trending. And I think, TradFi is trending down, and I think oil is trending up. And I know my edge. So I'll naturally gravitate towards those assets. And, in this type of environment, like when we trade on a trending basis, obviously, I mean, I guess I could have said the same, that we're trending downwards in Bitcoin, and that was the obvious trade. And in hindsight, yeah, sure. But I'm naturally bullish. I love being bullish. I love markets. I'm not a doomer by heart. So it's hard for me to stick to a downtrend and stay short. And the expected value isn't there for me to stay short all the time. But that's what makes my trading style, simple. I like things that go up, and I like when they trend up. And I'm really good at maximizing my output when we trend. This monthly chart is disgusting.
Yeah,
very
horrendous. We got 2 days.
Yeah, this pin bar, bullish
can be saved.
Pin bar, I honestly think this is the only area of interest for me for building longs, and I'm talking leverage longs. Rob, we got 2 more minutes with you before we move on to our next segment. What, are you a spot buyer here? And at what point do you put leveraged swing longs on and stop worrying about the range?
So from a macro perspective, I'm glad you asked that to tune this out here. I like a drop right back into, if this range were to break, if I'm positioned now, whatever. If we were to drop into this 57.7, I'd start scaling in in my perspective, and all the way up until really like around these highs over here is what I like. I like to see how previous price action reacted in the past to dictate the future. And that goes especially on the macro end of things. I think people are too focused on what's happening lower time frame, and they're going to lose sight of the higher time frame sort of thing. So we had significant candlestick there before prior consolidation, before this whole move up. And we had a sick candlestick to rebuy us back up to the highs. I think that's just a natural good spot to look for spot. And that's where I'll go heavy spot if I get that. So really it's just a long invalidation for spot for me. And for leverage, I'm looking for pockets. I'm looking for deviations. I don't want to necessarily knife catch a crazy crash down. And it's been so long that we've seen a crash and a full V shape, even on that 10-10 wick. Like we didn't, I mean, it is right now. Kind of skewed much.
That 10-10 wick was brutal.
Yeah, brutal. Like we didn't even see, like we just haven't seen that sort of candle wick that we're used to in 2021. I can name the dates. December 22nd of 2020. Like I remember these days. And until that happens, I'm waiting for these levels. Those are my levels of interest. How about you? I'm interested before I get off.
I'm buying spot from here down to 50, but leverage, I don't really want to swing long for a while. Follis, what do you think?
Well, I think the obvious answer is like if you want to stack spot from here down, like that's fine. That's fine to accumulate. I think leverage comes when the trend reverses, right? Why the hell would you be putting on leverage on the long side here when we just had, 5, maybe even 6 monthly candles to the downside, right? Leverage comes when the trend reverses and you get a high time frame uptrend starting, right? And it doesn't matter if you miss the first 20, 30, 40% of that move. You're still catching the meat. You're still making money.
Yeah, 100%.
If you think price is going higher from this point on, you buy and don't look back.
Yeah. Well, Rob, thank you for joining us today. Absolute ball. I'm going to call you tomorrow. Let's get together in person, grab some dinner, work out, and talk more markets.
Yeah, always a pleasure, guys. I appreciate you guys having me. Like I said, I love what you're doing, and have a good rest of your Sunday.
Cheers, Woods. Thank you, man.
Speaking of trend reversals, I love looking back at this price action specifically from Bitcoin on the daily from 2023 to 2024, because this is the most beautiful example of when to compound longs, right? So this was like the trend down. We saw a pretty flat bottom into a nice pump first, higher low. And then your thought process should be higher low, or will it be a higher low? I can, take another chance here. And then when you start to see this one was a little weird, but every single low becomes a higher low and way less depth on these lows. And you get incredible vertical accumulation, right? Like these hallways of accumulation are such good longs, great for breakout longs. You can, set an invalidation kind of up above or below every single one of these wicks. It's just, this is like I 10x'd my net worth in this time period here. This was a revolutionary year for me. And that has been, that was all time. So I love looking back at charts and kind of evaluating like where my brain was at that time. It's like one of the best exercises. And if you journal, it's so very good to also journal and, go and just relive that moment. And what did your brain do in that moment? What was I thinking in this trade? What happened when I was wrong? Why did I invalidate? And I can say the same here. This was some of the worst trading I've ever done in my whole life. This horrible range. This was the summer of 24. Absolutely crushed me to the bones. But I'm sure you probably crushed this, didn't you?
I did pretty well in that range. Yeah, I quite enjoyed it. I remember because it was pretty standard range bound rules, right? It was like de-risk into the range highs, kind of like look to add and look for support to act as support into the range lows. Yeah, I think I had a pretty good time there. But the crazy thing is, and this will speak to our respective trading styles, is I got absolutely toasted when Trump won and we broke out and we went from like 60 something K to 100K in a few weeks, right? Because for me, that was where I was.
That was 2024, right?
Yeah.
Yeah.
Oh, sorry. Is that not? I can't really see the chart.
Yeah, it is. No, that's here.
That is. Yeah. So that's the downside of range trading is like you play the range until it breaks, and then when it breaks, you're going to get caught offside at least once, maybe a couple of times, depending on how much risk you're willing to put on that side of the bet. But yeah, that's just the downside to running a strategy like that, and kind of something.
I can't believe Trump has only been president for a year. Is that really what we're going into?
I know.
Is it really only been a year?
It's actually nuts. It's actually nuts, and like so much has happened. So many geopolitical shifts. You guys nearly added Greenland to, as the 52nd state. That was like 2 months ago, man.
Oh man, crypto is aging us, brother.
I know,
Wow.
yeah. So I just have a chart here. I'm wondering,
Yeah,
can I share
show
it
me
with
it.
the
Yeah, you go.
guys pull up? So yeah, I mean, you spoke about that uptrend, you spoke about those higher lows, right? And this kind of speaks to, the question you asked Woods there, which is like, are you putting leverage on here? Are you leveraging longs? Are you buying spot? And it's like, why would you? Because you look at the structure here, and what have we just done for the first time since like 2022, right? We no longer have these higher highs, higher lows. We've just put in a lower low, right? And even if we do kind of come up and put in another shoulder here, like even if it goes up to like 100K, this is still a lower low. And the expectancy here is that we put in some downside, right? I think something that a lot of traders get wrong is, you can have conviction in an idea and you can think that, okay, I think that BTC will trade at 250K sometime in the future. But that doesn't mean that you're going, okay, time to 50x leverage my longs here. Like, look what you're playing with here. You're playing with a downtrend that has been ongoing since like 6th of October, right? And if you're longing this, you're effectively standing in front of a moving train to pick up pennies, right? It's this idea of like, you don't want to be the guy fading momentum, right? And it's one of the first lessons you learn as a trader is like, the trend is your friend until it ends, right? And that seems so obvious, but it really is one of those things that you need to keep in mind when you're looking at these moves. Why would you fade this kind of downside momentum, right? If you wait for the trend reverse, and I'm not saying that this is going to happen, right? Because I actually don't think it will. But let's say you get something like this, and then all of a sudden you get this, right? And again, I don't think this will happen, but let's say that this does, right? And you're longing like here or you're longing here, right? When you have all this confirmation, right? Guys are looking at that and they're going, oh man, I missed the first like 40, 50% of the move, whatever it is. It doesn't matter as long as you're
Yeah.
catching the remainder of the move. And at that point, you have confirmation, right? You have conviction and you have predefined risk because you now have a low that you can play from or a series of lows that you can play from, and they will act as your invalidations. So now instead of like trying to guess where the bottom is and being like, oh shit, well I jump in here, and then like you catch like a 0.5% move, and then you're like, oh okay, I'm out because I don't have conviction. Now you're in with conviction, right? You're in with self belief. You're in with size because you can size into a trade when you're playing with the trend, and you have a preset invalidation. And those are the trades that people should be looking to take rather than this fucking knife catchy thing. Everyone's a genius. Like, oh, like I sniped the bottom. That stuff is good for social media, but the majority of the money is made in the middle, right? And that's what you should be focused on if you're trying to play this move.
Dude, you know who's so fucking good at doing that? Excuse my language. Chiefing Za. I just had dinner with him the other night. He hasn't traded in a year. Hasn't put on a trade in a year. Last trade he took was Liberation Day last year. Put on a 9-figure long on that wick low. 20-30% on 9 figures, logged out. Hasn't taken a trade since. I was like, dude, text me.
Yeah.
What are we talking about here? He does that.
Yeah.
He'll take 2 trades a year on like the largest size that you could fathom. Capture 20-30%, clock out. Go, side quest forever for 12 months. And then he's finally saying to me, he's like, I'm interested in paying attention again, which is a good sign.
That's a sign, yeah. But I mean, it's quality over quantity, right? And I think that's something as well that beginner traders get wrong is they feel like because it's in this age of ubiquitous social media, you log into Twitter and you just see like trade, like big P&L, equity curve, and you're like, oh man, like I got it. And then there's the guys that are like, you only have 2 years left to make generational wealth. And it genuinely like I've spoken to guys and they're like they have like crippling anxiety because they think that the profitable market as we know it will end in like 2028, when in fact like you should be thinking about making money in terms of years and decades, not in terms of weeks and months, right? And these young guys especially, they get this crazy FOMO and then they're like, man, I have to be in like 500 trades a month or else I'm not going to make it, when in fact actually like I'm no Chief Singer, but like man, I took 2 trades this month. I think in February I took maybe like 10 to 15, right? And the last like few months for me has been incredibly profitable, but it's because I've been very selective about the trades that I put on, and I've been very mindful about, keeping some dry powder in case we do get levels that I'm watching for, and just being a little bit more selective with my capital, right? But if you're this kind of guy who's just, throwing money at every single like C plus setup that you get, you're just going to get chopped up. You're going to get frustrated, and your portfolio and mental health are both going to take a hit, as well as your trading confidence, right? There's no doubt about it. Something
I've
I just
been
want to
that
look
guy.
at here is the range itself, right? So, I mean, guys who have been watching this stream from the beginning will know that, Ponzi was saying that he's a very good breakout trader, and something that I trade quite well is ranges. And I think that, this range has given a lot of good opportunities to get short and get long, right? It has kind of given both sides here. And that's kind of one of the reasons why, like, people assume that, I think people assume that, BTC is going to teleport to 50K tomorrow, because we've had this downside move from the Tuesday 17th from 76K all the way down to, what are we now at, like 65, 65.9. But actually for me, this is kind of like a level of support. Now that doesn't mean that we bounce from here and go to new all-time highs or anything like that. But for me, like if you've been short from higher and now we're trading down here, I think this is where like you take some off the table and potentially even go flat, right? This is kind of where you're looking for support to act as support, right? We've taken some pretty big sell side liquidity levels. We're trading at this value area low, which is kind of where you expect the asset to be undervalued, right? The asset is seen as cheap. Buyers are more willing to step in. And this is kind of where you're expecting support to hold. So for me, like, I think that, I don't want to be the guy making these crazy predictions, but like, if you're putting on a short here and you're looking for 50K, I think you're really gambling on a headline. And that's not necessarily the kind of trade that you want to be in, albeit possibly one that makes sense given the macro that's going on. What are your thoughts on that, Ponzi? I mean, like,
I am so glad you just gave me a stop loss entry and target, because I'm not even kidding. I have my laptop down here and I looked at your range and I decided to take some levels. I'm longing from 63,000 up to 66,000 with an invalidation just below that middle wick.
This,
yeah.
there you go.
Yeah.
So
And
what's your entry on this?
But if I get fully filled, my average will be 64.6. But I don't anticipate, if I do get fully filled, I'm more concerned. I
Yeah.
normally leave those limits on the lower side of the range for like actual wicks, but my thesis is that we get some sort of relief in the next 24 hours, 48 hours, bullshit taco headlines, whatever it is, some sort of relief. And then I honestly don't even expect the highs. I want 69,000.
There you go. Yeah, that's exactly where I have it, man. Yeah, you're basically looking for the point of control here, which is a great target. If you're playing this range as a range bound trader, you go from value area extreme to point of control. That's a beautiful trade.
Yeah. And I'm hedging with this poly market line for US forces entering Iran by the end of the month.
Nice. The old poly market hedge. I like that. I like that
And it's
a
like
lot.
a hedge that's like 1/100th of the size of the trade. So it obviously makes sense. It's just a mental hedge.
A chart I want to get your opinion on, actually, and maybe this can be something that you have a take on. I don't know if you looked at the US 10-year bond yields. And it's a little bit adjacent to crypto, but also quite related, because crypto is obviously a risk asset, and everything that Trump is doing in the Middle East obviously plays into this 9 trillion debt that the US has, and the bond yields obviously play a massive part in that. So like, I think that's something we've seen when the US 10-year bond yields are trending up to like 4.5%, this danger zone, is that Trump tends to introduce these kind of bullish measures in the market, and we see risk assets ease off, the stock market rallies. I'm curious to know, do you have a take on that? Because I've seen so many conspiracy theories fly around and so many wild takes, but I'm curious to know, is that something that you're watching or paying attention to?
It's, to me, I don't even watch the chart as much as just kind of check the quotation board. And like, nobody wants US debt right now.
Yeah.
To me, it's like a trending, it's been a trend for the last 5 years, and it's a continuing trend that the US powerhouse is slowly fading. And I anticipate more interest in foreign bonds than US. So yes, I pay attention. No, I'm not charting. And I'm sure he's going to try whatever he can to What are you rating there? Free
shorts. If we go above like 5% on the US 10-year bond yields, I'm going to short everything that I can. It's basically free shorts on any kind of risk asset, because at that
Yeah.
point, yeah, I
What's
think the
the time frame on
BTC,
that chart?
that's the weekly.
Okay.
Yeah, so
Yeah.
it's funny. It's funny how we just saw a pop up above like the 4.45% danger zone. And that was like a week ago. And that was right when Trump announced that there was going to be a 5-day pause, right from like Monday market open to Friday market close. But yeah, it's definitely something that I think you need to you need to be aware of when it comes to risk assets like crypto. For the last 60 seconds of the segment, Ponzi, I want to know, are there any altcoins that have your attention? I know
So
that
glad you
Woods,
asked.
please jump in.
I got 50 seconds to tell you about how my Tau trade was a fucking heater.
I was just about to say, are you trading Tau? Because I know Woods
Dude,
mentioned it.
last show I went long in the 200s and closed in the 350s. Stoked. Still watching Kita for whatever reason. I don't know why I decided to build a position in this. I've been influenced by others. But no, not really looking at anything else. I have no interest in high beta assets until, unless they have some sort of driven narrative like the All In podcast shillers aggressively filling hundreds of millions of dollars and then making it their entire goal to send it higher.
That's interesting. Yeah. I mean, I'm also watching Tau. I think that it's probably one of the only interesting altcoins on my watch list right now, in addition to Hype. But I feel like Hype, for me, I can't fathom buying it at these levels. I want to wait for a proper nuke and then stock up at some kind of relative cheap price. But yeah, it's like you say, I mean, for me, until Bitcoin stabilizes, there's no point going too heavy into high beta risk on assets.
Yeah. Well, guys, thank you for attending the Crypto Closeout. Every Sunday, if you're new here, we will be here to help you guys understand what has happened in the last week and what will be happening in the next week. Trader Main, come back to us. We miss you. Thanks for having us.
Thanks, guys. Appreciate it.